And we're looking at gains for today. As of this week, the Mag 7 gaining more than 1.6 trillion in market cap since August 5th. That's nearly half of what the S&P 500 has gained in that same period, over 3.6 trillion. After the market rout hit mega cap tech as recessionary fears and the unwind of the carry trade pushed markets lower earlier this month. But when you take a look at today's movements to the upside, take a look at the rebound that we've seen. What should we prepare for going forward? Bringing in our next guest, we want to talk about all of this movement with Keith Lerner. We've got Truist Co-Chief Investment Officer and Chief Market Strategist joining us. Keith, it's great to see you. And I know that you specifically have been looking at tech. You got a bit, not bearish, but you were saying that we were ready for a bit of a pullback. And now you're back saying that you like these valuation levels. What does that signal just in terms of the market leadership that we could see?
Yeah, well, great to be back with you. Actually, you and I and Brad were together on that Monday opening when the VIX went up over 100%. So, 2 weeks later, here we are almost, 1% away from all-time highs for the market. So going specifically to tech, we downgraded tech at the end of June because we thought it got stretched on most of our metrics that we looked at. And then during that same week that I just mentioned, on August the 8th, we upgraded tech because in our work, it went from the best 1 month outperformance in 20 years to the 1 month worst underperformance in 20 years. And all that correction in our work was just repositioned. And the earning trends for technology is at a 52-week high. So our main focus is that we still think tech is leadership. And we think that AI story is still intact. So that at this point, we are back to overweight, again, doing that earlier this month on the pullback.
Keith, I do not have enough Dramamine for all of these moves that we've been tracking. We're seeing VIX spike, and then of course we see the sell-off, and then now we're back at these levels where we're talking once again about being in the ballpark potentially of all-time highs for the major averages here. As you think about what investors should be doing to diversify, even if they are trying to ready their portfolio for what some of your other industry colleagues are saying, hey, brace for another potential downturn, where should that diversification lead them?
Yeah, it's fair. Now, the first thing I'll just say, the pullback we've seen in off the low, I mean, the peak to trough decline was about 8.5%. If you look at it historically, after strong first halves, you normally see a correction of about 9%. So that was pretty good, pretty consistent with history. You also tend to see 1, 2, or 3 other corrections by the end of the year. So I think we'll likely have another corrective period. But I think here's the important thing, is that we're in a bull market. The primary trend is still positive. You want to stick with that primary trend until the weight of the evidence shifts and use pullbacks as opportunity. And then answering your question more on the diversification side, I mean, we invest globally. We still like the U.S. We're still Team USA. We still prefer large caps over small caps as a whole. And then outside of that, we think high-quality bonds are acting like bonds again. So we like bonds, even though we did cut our duration more recently as well. And then lastly, I'll just say, we do have, just for the diversification, we have a modest position in gold as a hedge, which is actually making, all-time highs right now.
I'm just going to piggyback off of that. Keith, you said that you at Truist are still Team USA on the investment perspective. Who is the analogous Steph Curry? What sector is the analogous Steph Curry, or even some of the specific names within themes that you're tracking across this investment thesis right now?
Yeah, so I kind of gave it away earlier. We're still, we're overweight tech, we're over communication services, and we're overweight utilities. Utilities is a play on somewhat low interest rates, number one, a little bit of an AI play, and also somewhat of a cooling economy also. I will say that more broadly, you talked about this. I mean, we are seeing other areas participate. Financials, industrials, staples also are doing well. So I think the market will have broader participation, but we still think the magnificent seven and the technology is still leadership. So we still think that's the Stephen Curry, but like the Team USA basketball team was pretty deep and broad, and I think this market is you're seeing better signs of that right now as well.